Hello, everybody. Welcome into Commodity Culture, where our goal is to make you a better investor in the commodities space. Today, I'm having an epic conversation with Doomberg, author of the acclaimed Doomberg Substack, where he writes about energy, finance, and geopolitics. We're going to be discussing all three of those topics, getting his thoughts on an impending energy crisis in Europe and what he sees as the potential collapse of the European Union, along with how natural gas and nuclear energy are set to change everything when it comes to the AI revolution, his thoughts on the obscure tin market, and of course the gold and silver markets as well. Without further ado, here is my conversation with Doomberg. I wanted to start the conversation today with something you wrote in a recent edition of your Substack, where you said, unless and until Europe reconciles with Russia, begins a massive exploration and production campaign for all three fossil fuels, and embarks on a drive to build as many nuclear power reactors as it can, the EU is stuck in an economic doom loop that can only end in its destruction. So walk us through what you're seeing with regards to Europe and energy, and how it could lead to the destruction of the European Union.
One of the things that we find interesting about macroeconomic analysis is, despite the fact that most people intuitively know that energy is an incredibly important variable to study, very few people include energy as a foundational aspect of their mental models that they use to try to understand the world. And of course, one of the differentiating aspects of our writing is that we use energy as such a foundation. And once you have that sort of axiomatic instinct about energy, you can very easily explain that which might seem confusing to others. So the particular subject at hand that caused us to write that report was Mario Draghi's report on the EU's competitiveness or lack thereof, and his proposed solutions to address this competitive gap between the European Union and especially the US and China. And for all of the hoop jumping the report goes through, it dodges the most fundamental issue, which is the European Union, which notably does not include the UK and Norway. They are not EU members. The member states of the European Union produce basically very little of its own energy. In the piece, we mentioned how the EU consumes something like 10% of the world's oil, but produces only 0.5% of it. It's similar numbers for natural gas. It produces a bit more of its own coal, but not much. And so the laws of physics just dictate that you cannot project economic and military power if you're an energy vassal. They rely on others for their energy. This was okay and manageable when a steady supply of reliable and cheap fossil fuels was on offer from Russia via pipeline and oil and petroleum products alike. That's no longer the case. And that's it. That's the level of analysis you need to do. Renewables are not going to solve the EU's problem. If you don't have energy, you can't maintain industrial might. And military might is a derivative of industrial might. And so the three things that we say in the piece that the EU needs to do, they aren't going to do. Let's be clear. We don't predict that's what they'll do. And for example, like reconciling with Russia, even mentioning that they need to do that will inflame some people. And of course, we're thinking in terms of years and decades, not months, and who knows how the war in Ukraine will resolve and who will be in charge of what countries by then. But the physics are just undeniable. Europe doesn't produce its own energy. You can't have heavy manufacturing with a dumb energy policy. So if you don't have heavy manufacturing, you can't be competitive against the energy superpowers that do. And it's just that simple.
Now, there's going to be comments below this. There's always a lot of comments online about it's all by design. Now, in that same article, you also noted how utterly out of touch political elites such as Draghi and Ursula von der Leyen are with reality. It's a question I've covered many times on the show. I know at Doomberg, you're very free of hyperbole and conspiracy theories. You kind of just examine the facts that are presented to you. But are these people really this out of touch, really this ignorant, kind of caught up in their own bubble? Or are all of the seeming policy blunders, not only surrounding energy, but immigration and the economy, part of a greater plan being pushed by the Davos elite?
We understand why people hold such views. The elites of the Western world confound us with their own seeming lack of basic understanding of both energy, economics, and apparently, military strategy, as we're seeing NATO being handed what amounts to a defeat on the battlefield. The sanctions, as we predicted weeks after they were levied, were all but designed to not only fail but backfire. I still can't convince myself that Justin Trudeau's obvious incompetence, for example, because he's not a very intelligent man, doesn't explain the insanity of some of his policies more than some mischievous plot. Now, some will argue that there's somebody pulling the strings behind Justin Trudeau and the Ursula von der Leyens, but Mario Draghi is a very talented person, seems to be relatively patriotic, tried his best to save the euro, for example, famously when he was the head of the European Central Bank. I'm still in the incompetence camp and not in the malice camp. And if there truly is a small sort of inner cabal of people who are deeply evil, and they probably exist, at best they are exercising their power indirectly. If I look at the recent election results in Europe, for example, we're seeing this, as we predicted, rightward tilt. The people and their votes are having an impact. For example, we're seeing policy changes in Germany. We're seeing coalitions being formed to keep certain parties out of power, but by doing so, they have to make certain compromises and partner with some strange bedfellows, to say the least. But I think this kind of thing will correct itself. And so, if there is a small cabal of truly evil people, they will be overcome. The upward direction of human progress is not something we would bet against, as shown in the global energy consumption graphs that just keep going up and to the right at 2% a year forever. So if there is such a desire, it will fail, and means will be regressed to, and crisis will come and go, and the human endeavor will continue to progress forward.
Hey guys, just a quick break to hear from today's sponsor, ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. Well, I want to pull on a thread there regarding NATO getting defeated on the battlefield in regards to Ukraine. Why is it that we're hearing the exact opposite from the Western media? And why is it that Western politicians are seemingly hell-bent on the only option here is total victory, when that is so apparently not occurring? At least, I mean, you hear all sorts of different things from different sources. I know from your own analysis that you think it's not playing out in favor of the Ukrainian forces. And I've heard many people say the same. So why are we being fed a counter narrative? And why are the politicians in the West just not willing to concede or to at least sit down at the negotiating table?
One of the reasons why you try your best to not get involved in wars is that you might lose them. And in this instance, again, back to energy and physics, Russia is a global energy gigapower. It has outstanding technology and manufacturing sectors, which are often underestimated in the West. We have been bemoaning this relative techno-arrogance that we see amongst predominantly Western analysts who just, assume that Russia won't be able to run its own oil wells or natural gas production facilities without the help of Western, suppliers. This is nonsense. Anybody who has any, international business experience knows that Russia is a formidable competitor. They have excellent education. So look, we're not being Russophiles over here. You have to be realists and just acknowledge that they are a superpower. They have the world's largest and most advanced nuclear power arsenal. This war is much closer to their border than it is to the US's border. The logistics of supplying an army right next to you is a lot easier than the logistics of supplying an army from the Western Hemisphere, where most of your components are sourced from China. And they have way more people. And to them, if you read the Russian propaganda, which we do, we read the Ukrainian propaganda, we read the Western propaganda. You can't read anything without reading propaganda. But when you read the Russian propaganda, this is being shaped internally as an existential struggle. And it's certainly an existential struggle for Ukraine. And I should say, like, no country and no citizens of any country have suffered nor will suffer more than the Ukrainians as a result of this war. They will say we had no choice. This is Putin's aggression, and that all may be true. But the facts are that Russia has more manpower, more weaponry, more capacity to build its own weaponry, and has developed substantial technological advances since the start of the war. And those advances are bearing fruit. And even in the Financial Times and the New York Times and the Washington Post, we're beginning to see articles where there are discussions about how maybe there's a land for admission to NATO deal or some other negotiated settlement where Russia keeps the territories it has conquered, at least temporarily. And maybe we don't recognize Russia's sovereignty over that. And in 20 years or 30 years, like Germany reconciled, Ukraine will someday reconcile as well. And in the meantime, we'll welcome them into NATO. We would fade those hopes because the entire reason Russia went into war was to keep Ukraine out of NATO. It would be hard to imagine that with momentum on its side on the battlefield, it would agree to such terms. And frankly, it's hard to imagine that certain aspects of Ukrainian society would be comfortable agreeing to those terms as well. So it's hard to see how the war isn't settled on the battlefield. However the war resolves, it will be militarily. And if NATO, one of our major concerns is how will NATO respond to losing a war? Will they escalate, which ends in a nuclear confrontation? So I don't know how we get out of the situation we're in, but I think any objective analysis of progress on the battlefield would tell you that momentum is clearly not on the side of NATO and Ukraine. And by the way, we have a very, very tough winter coming for Ukraine in what we have openly described and believe are war crimes. Russia has targeted and knocked out much of the civilian energy infrastructure all across Ukraine. Now, the Russians would say that this electricity is used to produce weapons and makes it a fair target, but disproportionately, this is going to fall hardest on the people of Ukraine. And if it's an especially tough winter, luckily last winter was mild. If we have a tough winter in Ukraine, if you don't have electricity and district heating, it's very difficult to imagine that we don't see significant migration out of Ukraine, which I believe is the point of those targeted strikes on the energy infrastructure, and it's what makes them war crimes. And so trying to analyze the situation to understand the reality to the best we can does not mean that we are hoping for any particular outcome. I just think you have to be realistic about what's going on. And it's difficult to imagine that the political support needed to keep tens of billions of dollars worth of weaponry going into Ukraine, whether we even have stockpiles to give is a different question. We're not on a war economy footing, but Russia is. And Russia's not a country with a gas station on it, as so many politicians over here believe. It is a very sophisticated country that has defeated armies as they roll from east to west multiple times. And this is, in their mind, just the latest example of them having to do that. There's an entirely different way to see the war, and we understand that, but this is our view.
Very interesting. I want to shift to the United States now because we have perhaps one of the most polarizing presidential elections in recent history coming up. As far as I'm aware, neither candidate has discussed so far cutting back on government spending and reining in the ballooning debt and deficits. No matter who wins, is this going to continue to be a print or die scenario in your view? And do you see much of a difference between a Trump and a Harris term? in terms of how it impacts the economy and financial markets?
If you go by history, Trump was just as prolific a spender as any Democratic regime. And our base case is that it's never popular to cut spending. And there's just an insufficient groundswell for fiscal discipline. It used to be that these things mattered, the contract with America and Newt Gingrich and all of these things. And during the Clinton administration, he did, to Clinton's everlasting credit, balance the budget and delivered a surplus in partnership with the Republican Congress, which is probably kind of an ideal outcome. A mixed Congress and president, either way, Republican with Democrats or a Democratic president with Republicans, because it forces some semblance of compromise and shaves off the edges of extreme policy implementations. There's one possible exception. I don't know how realistic this is, but there is this talk that Elon Musk will be put in charge of, cutting government spending at the same rate at which he has, for example, taken out various Twitter employees. We would suspect that he would find this new challenge to be significantly more formidable than completely owning your own company and firing everybody that you deem fit. This is not how, the government employee unions have created laws and have judges in place and so on that make it almost impossible to fire somebody. It would require substantially more authority than even the president of the United States is granted as a result of winning an election. So, but I don't think that's going to happen anyway. I think if Trump wins, I would suspect that Musk probably has better things to do with his time. But certainly if Harris wins or we get a Democratic sweep, which is possible, then yeah, I think it's print until we die. I don't think it's print or die, because I don't know how we get out of $1 trillion in debt every 90 days and $1.2 trillion now in annual interest payments. We're going to run a very interesting experiment where the global reserve currency is printing its way out of debt, printing its way to pay off its interest, actually, which is essentially a Ponzi scheme.
Well, I want to discuss gold as well and how it might play a role in this situation, because obviously we have the BRICS summit coming up. I believe it's October 22nd to 24th, hosted by Russia. There's a lot of rumblings that there's going to be some kind of gold and commodities backed currency system announced. This was also flaunted maybe a year ago when I believe the Russian embassy in Kenya tweeted that this gold-backed currency is going to be announced. It was not. Putin has mentioned they are working on an alternate payment system. I wonder what your thoughts are currently surrounding the narrative of the BRICS creating their own currency for trade, potentially backed by gold.
Yeah, I don't necessarily think it's a currency in the way that we think of the US dollar. It's more a mechanism to settle imbalances that arise in international trade, using gold as an anchor neutral reserve asset, and some basket of currencies that I hear is tentatively being called, quote, the unit, which is a rather humorous name for it. And the numbers I saw, it would be like 40% backed by gold. And so I believe, by the way, that this is the most rational explanation for why gold has basically gone straight up this year. Because if there is going to be some form of a new neutral reserve asset used for the settlement of imbalances in international trade that involves gold, then the price of gold in US dollars needs to be much higher. And so we shall see. The meeting is in Kazan, as you said, and it's hosted by Russia. And we've written a bit of a speculative piece that maybe Brazilian President Lula might torpedo the whole effort as sort of a double agent for the US. That was a bit of a fun piece. It triggered a bit of a controversial response, but that just means we're writing provocatively. We'll see. We're watching with interest as everybody else. I should disclose that I'm uncomfortably long gold. I took a little bit off recently. It unsettles me when gold goes straight up, because it usually means other aspects of my portfolio need to be dealt with, and perhaps some concern about, because gold, in our view, is not an investment, and it's not a speculative media. It's a store of value, And if gold is going up, then the value of the US dollar is going down, is how we interpret it. And we have a lot of US dollar based assets that don't involve gold, and they would all be being derated because of currency debasement. And very, very few Western investors have any exposure to gold that matters. And so, social cohesion and economic crises and so on, if we were to wake up tomorrow and gold were $5,000 an ounce, the small, double-digit percent of my net worth that's currently in gold would double, and the rest of my portfolio would go down by more than that. And on balance, I would not be happy that gold is at $5,000 an ounce. And so, but I own it and other real assets as hedges, not investments. And you don't really want your hedges to pay off.
Yeah, absolutely. Any thoughts on silver here? Obviously, very far from its all-time highs, holding above $31 at this point in time, I believe. I've had a lot of silver bulls on this show making what some might consider outrageous calls. $50, $100 silver is on the horizon. It's going to go parabolic. You've seen these types of interviews. You've seen those types of headlines. I wonder what your thoughts are on the future of the silver market.
Yeah, I see those. That's sort of content clickbaity type stuff, which, sometimes the YouTube thumbnail is different than the discussion. And not being on YouTube professionally, I can't say that I understand how the algorithm works in that way. For a more nuanced but equally bullish view, I would suggest maybe give a plug to one of our friends and a new Substack writer who you should probably have on the show, by the way. John Johnston, of the author of Market Vibes. He's known by his friends as Sir JJ. He's not knighted, but he has been in and around the commodity sector for 50 years, if you can believe it. Was trading in the pits in the 70s. And he writes a fantastic Substack, twice daily Substack on the markets. And he is bullish silver, has been bullish silver for the last $5-6, and writes pretty compellingly why he's bullish silver. We don't own any. I just buy gold. It's more a higher density of storage, in my safe. But I understand why people are bullish silver, because there is this incremental potential demand in solar for it and so on. But Sir JJ's bullish silver, and if he's bullish silver, then I would say that, given my respect that I have for him and the quality of his analysis, that he's probably right. So his Substack is jj745.substack.com. Look him up if you're interested. He's a great read, and we recommend him highly.
Fantastic. Well, let's talk about nuclear. The continued growth of nuclear energy adoption around the world is accelerating. You've written several pieces about this. I'm wondering what the latest catalyst you're currently paying attention to are when it comes to nuclear and the uranium sector as well.
Yeah, we recently wrote a piece about a very important event that we think was even more important than the astonishing announcement that Microsoft would facilitate the reopening of 3 Mile Island. The piece was titled Cometh the Hour. The same week that announcement transpired, a really important meeting happened on the sidelines of Climate Week, where 14 of the biggest banks of the world got together and decided or proclaimed, at the urging of no less than John Podesta, the U.S. climate czar, that nuclear energy be treated and financed with the same favorable sustainability profile as wind and solar. And that's a sea change, unimaginable that would have had occurred when we started writing Doomberg just 3.5 years ago. And there's been many, many voices calling for this, that you can't really be serious about carbon emissions and be anti-nuclear at the same time. And so I think finally we're getting to where physics dictates we have to go. And nuclear will be slow, right? There's another piece we're working on about which facilities are likely to get financed and built first based on time to completion and permitting and so on. But once you have a nuclear power plant, unless you're the Germans and you're stupid, it's good for 80 years, 100 years. I mean, these are forever investments if you properly maintain them, and most people do. You could run them basically forever, or the only exception to this is the British from a technology perspective, but the Germans was just, self-impalement. You can keep running these plants for a very, very long time. They're the ultimate set it and forget it trade. The Chinese are cranking these reactors out at a pittance compared to what it costs to build them in the West, and will establish a multi-decade economic advantage for having done so. And the quicker we could get going on this, the better. And financing is a really important part of this. And as we open that piece with one of our favorite expressions, which I wish I could remember who taught it to me, but it comes from the venture capital world, which is all the deals are undersubscribed except for the ones that are oversubscribed. And financing, be it startup financing or in this case project financing, is nothing but a confidence game. And if everybody else suddenly knows that everyone else is willing to back a deal, in this case the big banks and the government, you'll find all manner of pension investing money who need to duration match and so on, willing to front capital with an assured payback period that matches their future liabilities. And if everyone now is blessing nuclear at the same time, then you'll go from 0 to 100 overnight. And that's what I suspect we'll see. And that's why we decided that that event was worthy of a full piece.
Well, I also want to talk about natural gas and how it fits into the AI picture, because you wrote about that in your latest piece where you said, will natural gas be the bridging fuel that carries the AI boom along until a full nuclear renaissance can be realized? All the signs are there. Talk to us about your findings in regards to natural gas and AI, and do they point to a potentially bullish future for prices in a resource that you've mentioned before you think is in a supply glut?
Yeah, so you said the two most important words, supply glut. We wrote a piece a few months ago that we quoted in this new one called Generational Arbitrage, how the North American natural glut must eventually clear. We miss this part of it, which is why we came back to the topic. We felt back then that some combination of engine switching and so on would necessarily mean that the oil to gas ratio would collapse again. When we first wrote about it, the ratio of the price of oil in barrels divided by the price of natural gas in million BTUs was 45. And on an energy content basis, it should really be 6. Historically, it had traded between sort of 10 and 20 because of the difficulties in handling natural gas. It's a bit more challenging, of course, because it is a gas. From the time we wrote that piece, that ratio has indeed come down from 45 to 25 at the time that we wrote this latest one. You can't have the cleanest burning hydrocarbon being given away indefinitely. People will find use for it, if for no other reason that they must find use for it in order to keep oil production going in the Permian, for example, because it's a co-product and the gas to oil ratios in the Permian are very high. The interesting thing about gas for AI is there's a few significant advantages. One, very, very cheap fuel. Right now, even at $2.75 per million BTU natural gas Henry Hub today, front month, that's $15, $16 a barrel oil. 2, clean burning. 3, quick to bring online. And if you co-locate data centers right next to the natural gas production, you don't need to grid connect. You can actually envision closed systems, sort of pods, where natural gas goes in one end of the pod and data comes out of the other. And it's far easier to ship data around the world than it is to ship natural gas. And so one of the things we speculated in the piece is that the major LNG exporters of the world, Malaysia, Qatar, would see an influx of investment, and they're seeing it. Because why chill natural gas and put it on these expensive ships when you could just use it directly and circumvent all that hoop jumping that goes into making LNG the globally traded fuel that it is. That doesn't mean that we will see less LNG, by the way. It just means we'll see more natural gas produced in these countries because they have an abundance of it. There's one thing that we know is the world has an enormous amount of natural gas. You can spool up a natural gas turbine to create electricity rather quickly, much quicker than a nuclear power reactor can be reopened, let alone built from a standing start, far more cheaply and more safely. And we think we'll do it. The one major constraint is how much do the Microsofts and the Googles of the world care about carbon emissions, because you're still burning a fossil fuel to run a computer or to cool a computer or to do both. But we suspect that if they won't do it, others will. and we, for example, a great place to do this would be in Alberta and British Columbia, where it's cold in the winter, which helps with cooling requirements, and you have this super natural gas field that is just waiting to be exploited. They could do it in Argentina. They could do it in Russia, do it in Saudi Arabia. And so we think the computers will go where the gas is. And this is probably bullish for North American natural gas. Another, kick in the where for the European economy, because this will necessarily mean that LNG will probably get more expensive, and that's how they're powering themselves these days. But the US, North America, global energy, gigapower, swimming in natural gas. It's the cheapest fuel on the board. It's the quickest to bring to market. And I don't think concerns about carbon emissions will be enough to withstand all of the natural forces that point in that direction. So that was the piece we just wrote called Bridge Burning. We will burn natural gas as a bridge to the time it takes us to build nuclear power. And then when that new nuclear power comes on, by the way, we'll probably keep burning natural gas anyway, because all primary energy sources are additive to the human endeavor. But that was a call that we made, and we think it's highly likely to pan out.
We've also been writing recently about how AI could disrupt the tin market. Walk us through what you're seeing there. Tin, obviously, kind of an obscure commodity, at least when it comes to the investment side of things. There's a community for it on Twitter, I believe, a Tin X community. What are you seeing when it comes to tin and its implications with the AI picture?
Tin's a two-part story. AI is but one part of it. Tin reminds me of uranium when we first started writing about uranium, $60 a pound ago, in that it has a small vocal community on Twitter. It's an underappreciated but really important metal. And for a very long time, the things that community has been saying are both true and not reflected in the price. And so one wonders when you reach sort of a turning point. What makes the tin situation unique and what motivated us to write about it was the fact that we have the largest mine for it in the world in what used to be known as Burma, and that mine has not been producing for more than a year. The country is undergoing civil unrest, ongoing civil wars there. It's a really tragic story, sandwiched between India and China. This particular mine is in what's known as the Wa state, right next to the Chinese border. And when the entity that controls that state, which, by the way, the U.S. is sanctioning, the United Wa State Army, or UWSA, last April, they announced that the mine would be closed indefinitely because of safety concerns and permitting issues. People assumed that this would last a few months and that the global tin stocks would be able to make up for any shortages. But the mine is still closed, and nobody quite knows why. If that mine reopens suddenly, you can expect a downdraft in the price of tin. But tin is one of the better returning metals on the board for 2024. It's doing quite well, up some 30% at the time that we wrote that piece. And it's something to keep an eye on. So it's a twofold story. You have an artificial supply crunch, and you have a potential increase in demand driven by AI, because the primary use of tin is in soldering applications, which is driven by semiconductor demand. And the demand for semiconductors is coming out of a mini bear market, and looks set to finally catch up to some of the AI hype that surrounds the stock market today.
We've seen geopolitical risk in the form of an escalating conflict in the Middle East seemingly drive the oil price higher. At least that's what several people have been alluding to as the reason why WTI crude prices shot up recently. What are your thoughts there? Is there a connection? Do you think that a further escalation of that war could drive prices even higher?
So first of all, that is clearly the reason why oil is spiking higher. You could see when certain bold red headlines cross the wires on Bloomberg, the oil price spikes $2-3. We're pondering publishing a piece on this. We haven't decided whether we will, but I'll give you sort of a preview of it. We have a bit of a counterintuitive view, and if we're wrong, by the way, and we're wrong before this podcast publishes, we'll be spectacularly wrong. But we would fade such concerns for the following reason. And again, this is sort of classic example of a problem in the way we like to think of it that might be contrary to conventional wisdom. We observed, with everyone else on Twitter, the Iranian attack on Israel on October 1st with some surprise. We saw with our own eyes various amateur films of the event directly published, which is what makes Twitter great, right? When you have one of these events unfolding, you see raw data, sometimes the occasional signal, with no censorship, no spin. And we saw what everyone saw, which is dozens of missiles striking Israeli territory, and very little in the way of the much vaunted Israeli air defense system knocking these missiles down. And even the Washington Post a few days later was forced to admit or concede to this reality that dozens of missiles had gotten through and struck a major Israeli Air Force base, and a couple of missiles even struck quite near to the Mossad headquarters, apparently. This tells us a few things. It tells us that Iran has ballistic missile capability that perhaps the West has underestimated. It tells us that perhaps the Israelis have overestimated the effectiveness of their air defense system. We assume in this piece that we're contemplating that Israel didn't fire the entirety of its repertoire, that it still has several thousand missiles, which is what the sort of Western analysts assume and have reported for years, that their stockpile is measured in thousands, not hundreds, and they shot 200 missiles against Israel in this one volley. And then the fourth assumption beyond those three is that the Israeli government now understands this, and this changes the strategic game theory rather significantly, because Israel is vulnerable in several important ways. First of all, it's a very small country, as we know. It's roughly the size of New Jersey and has roughly the same population as New Jersey. But its energy and its domestic water infrastructure are actually, their electricity is produced predominantly in 5 power plants, and it's desalinated water, which accounts for 80% of the drinking water in Israel, the developed water in Israel, is produced at 5 desalination plants. And all of these 10 facilities are above ground. Everybody knows where they are. And if Iran truly does have precision-guided ballistic missile technology that the Iron Dome and the other Israeli air defense systems are incapable of knocking down as comprehensively as they have been able to do so in the past, then we think this exposes Israel to a significant vulnerability, not unlike what the Ukrainians have experienced with the direct targeted assault of their energy infrastructure. To be perfectly clear, Iran would be very foolish to do this because it would almost certainly trigger a nuclear response from Israel. But at the same time, Israel has to be aware that this is a real possibility. And so this sort of mutually assured destruction now changes, I think, the game a little bit. And we would be surprised if Israel attacked Iranian oil infrastructure with this new development. Our assessment of the contemporary reporting of the potentiality of this outcome does not give sufficient weight to the consequences of what transpired on the 1st of October this year. And if we're right, and we could be wrong, and as I said at the beginning of this answer, perhaps even spectacularly so, but if we are right, then we would fade risk of escalation because we would assume that both sides would realize that it's in neither side's interest to directly escalate war with each other. That's probably a controversial view, but at least we show our homework, and those are the sort of axiomatic foundations of how we arrived at it.
Well, it's fantastic to hear different views on a subject such as this, instead of just people piling into oil thinking that it's going to the moon because the war is going to escalate. It's very important to view all of the factors at play, and you always do that, which is why I appreciate your work. So let's talk about that next. The Doomberg Substack. Give us some more info on the type of articles you write. Obviously, we've discussed a lot of topics today that were based on your articles, and where people can find it.
Yeah, I appreciate the opportunity, and I really enjoyed this discussion, Jesse, and always happy to come back on. I think what listeners probably heard today is that we strive to be analysts and not advocates. And so while we study energy markets thoroughly, we're not cheering for them to go up or cheering for them to go down. We're trying to do our best to understand the dynamics at play to the best of our abilities, and to write honestly about our beliefs, showing our homework and admitting when we're wrong. And I think that's a different product. Some people like a day trading product. Some people like to have their biases confirmed. That's not what we do. If we think oil is going to go up, we'll explain why we think oil is going to go up, and again, show our homework. And if we think oil is going to go down, or oil shouldn't be where it's priced, we'll explain. And then we're not afraid to pivot based on either learning why we got something wrong or the market realities changing. And this is an example with this Israeli story that I just told. When we saw those missiles striking Israel with the speed and quantity that they were, that was a game changer for us. We had just assumed that Israel had superior defensive capabilities in this regard. And when you look at the true vulnerabilities of a small country like Israel with only 10 million people, and very few but very critical, infrastructure needs, then you could see, okay, maybe this is different, and maybe the superficial stuff we're reading in the New York Times is not quite true. And so then you put it out, and we like to say that defending our pieces is just as important as writing and editing them. And we are very active in our comment section as well, which is closed to paying subscribers just to keep out the trolls and the noise. So Doomberg.com is where you can find everything. We write 7 to 8 articles a month. We also have a pro tier where we do a deep dive presentation once a month on all things energy and a few other topics. These are put together by us and delivered via webinar form. But the annual subscription gets you all the articles, and the pro tier gets you the articles and this monthly Doom Zoom, as we call it. Jesse, it's been great. Again, always enjoy talking to you, and looking forward to coming back anytime you'll have us.
Thank you for joining us today. As a reminder, this episode is brought to you by ARC Silver, Gold, Osmium for all your precious metals needs. Head to arcsgo.com, contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.